Hello, my name is Diana Herrera, and I am the Regional Insurance Specialist in FEMA Region 8 in Denver, Colorado. We're here today to talk about Flood Insurance 101. We're going to talk about some basic concepts, terms that are being used in the National Flood Insurance Program. I recently came back from a deployment handling the devastating floods that they had in Louisiana. At the same time, we were having Hurricane Matthew along the East Coast. Property owners were still in recovery phase. Many of them had no flood insurance. So what we're going to talk about today is how you, as the insurance agent, or any other stakeholder that we have, might be able to address some of the issues or might be able to provide general information to your clients, to your fellow coworkers, to anybody else about the National Flood Insurance Program. And this is a very basic course, and it's not going to cover everything. We have a flood insurance manual. We have guidance that is available on FEMA's website at fema.gov, where you can go for more information. These are just basic concepts and terms. So as an insurance agent, have you ever said, or has your client said, they don't need flood insurance? They don't want flood insurance? Or have you told your client it's not covered? You're not in a flood area? You're not in a flood zone? It's not available, when in fact it is? Or have you ever told your client it's never going to flood? I wish I had $1 every time somebody said, I live on a hill and it's never going to flood. In 2013, our Colorado floods out here were devastating for people who live on a hill. So how are you going to feel when it happens to your client, or even when it happens to you? In our Louisiana flooding, we had many insurance offices who suffered damage 1, 2, 3, 10 feet of water in their offices, and they were not prepared for it. But what you need to do as an insurance agent to protect your client is what we're going to talk about today. So your job as an insurance agent is to identify what risks your clients are exposed to, whether it's fire, flood, earthquake, tornado. Your job is to look at those risks and to provide insurance in order to cover that risk, because you're counseling to them to not have insurance. When those risks happen, it becomes a very emotional, physical, and financial liability to your client. So they need to cover their risk. And a lot of them feel like it's not going to happen to them, but you just never know. So if they say they don't need it, they don't want it, they only want what the mortgage company requires them to have, you need to counsel them of what their risk is, and then have them sign a disclaimer to be sure that you protect yourself and your errors and omissions. So the New York Times did a recent article in December by Ron Lieber that addressed some of the comments that he had talked to some people who had been damaged by Superstorm Sandy, because it was really a different kind of storm. A lot of property owners thought they weren't at risk, didn't have coverage, and only had federal disaster assistance to help them recover. And in many cases, that federal disaster assistance is not enough for them to bring their home back to the way it was before, bring their business back to the way it was before. So they had a big financial loss in order for them to try and recover. And in a lot of cases, people just don't come back. They just leave, they've had enough. One of the things that you can counsel your client on is to have a team. And there are several members of that team that they might want to contact. First person that they seem to want to talk to is the real estate professional, particularly if they're buying a new home or buying a business, they need to know what their risks are. What are they looking at? So the real estate is their first line of defense when it comes to what risk exposures they have. That real estate agent should be able to advise them as to what is their flood zone. Are they in a high risk, a medium risk, or a low risk? And what that means. Has it ever flooded? States have disclosure laws that says if that property's been flooded, they need to disclose that. The next person they want to talk to is the community flood expert, the floodplain manager. That floodplain manager could be found in the permitting office, or could be found in the zoning or planning or community development. So whoever issues permits for the floodplain, that's who they need to talk to. A person is going to be able to provide information as to whether or not there are any map changes, whether the risks are changing, so that they can take appropriate steps. Particularly if they're building new, and that new construction might want to be built to a higher standard in order to meet what the upcoming maps are going to show as the risk being for flood in that particular area. Early on, the property owner needs to contact their insurance professional. And that insurance professional too needs to know what's going on in the community with regards to map changes. They also need to know about the National Flood Insurance Program. What are the rules? What are the requirements? Particularly if they are required to get certain documents in order to write a flood insurance policy. Maybe we need an elevation certificate to determine how high the structure is. And rating may be better if the elevation of that lowest floor is higher than what the requirement is. The higher you go, the lower the premium. For every foot, it changes at about 50% of the premium. So it's good to look into that. An elevation certificate may help them, not going to hurt them, but it's something that you might want to look into. Another document that they may need to obtain is a floodproofing certificate. Floodproofing has to do with residential basements in certain communities in the country that's been approved for residential basement floodproofing. Your agent should be able to identify what communities those are in order to determine whether or not a certain document is going to have to be obtained in order to show that floodproofing. If it's a non-residential structure and it's been dry flood-proofed, meaning it's watertight, there's going to need to be a certificate that's signed by an engineer that's going to need to be provided in order to show that documentation when that agent writes that application. Agent then is going to have to do the application, collect the premium, give you appropriate documents that need to go to the mortgage company to show that flood insurance has been obtained for the amount, at least for what the mortgage company requires. But you know what? You really shouldn't work with that amount. You need to look at the value of the structure. Because a lot of times you get, like we had in Louisiana, like we had in the Hurricane Matthew area, you can pick any flood in any state over the last 5 years, and you may have some pretty deep flooding in there that could be 5-10 feet high, that it's going to damage more than what you've got for the mortgage company. So look at the value of the structure, and don't forget to insure your contents. The current agent needs to disclose to you certain things about that property. He should be able to, if he's had a flood, he should be able to advise you of that information. But one of the things that FEMA does is on an annual basis, is provide a claims statement historically of what has happened for that particular property. The Privacy Act does not allow FEMA to disclose claims information to somebody that does not own that property. So one of the ways that they can find out is to ask the current owner, has it flooded? How deep was the flooding? Did they have flood insurance? Was it repaired? Was it repaired correctly? So that information is going to have to come directly from the current owner. But one of the things that they can do is talk to the neighbors. Neighbors will be glad to tell them what's gone on in that community, whether there's been any flooding, whether there's been any other type of risks there that might affect decisions being made as to whether or not that's really a home that you want to, or a risk that you want to have. And it's not that bad to be in the high risk areas. You just need to be sure that structures are built correctly, if they're newer structures, and that if they're older structures, to be able to keep the rating, the subsidized ratings that we talked about, that we talk about for that particular property. So, since this is the National Flood Insurance Program, let's define the term flood, because it might not be the same flood that you're thinking. So, under the NFIP, a flood is surface water from any source, does not include seepage, does not include sewage backup, unless there's a general condition of flooding. So a general condition of flooding is water dispersed over 2 acres or 2 properties. And it's not just the neighbor's property, it could be the street. So when we've got surface water over 2 acres or 2 adjacent properties, that's called a flood in the National Flood Insurance Program. It also includes mud flow. Now, mud flow again might be a little, what you're thinking might not be what's covered. So in a mud flow, it's got to be some liquidity of flowing mud. So I liken it to tip over a milkshake. Milkshake kind of oozes up. It's got some consistency to it and just kind of moves on down the line. So that could also be a flood under the National Flood Insurance Program. So let's talk about some insurance terms and concepts. A couple of things we want to talk about when it comes to value. Actual cash value is the cost to replace minus applicable depreciation. That depreciation could be very subjective. You are a single person, or you're a married person, you have no children, you have no pets, the wear and tear on your contents are not going to be as heavy as somebody who has lots of kids, lots of pets, and they really wear their contents down. So when there's a loss, whether it's for flood, whether it's for fire, or whatever, they look at the actual cash value of the property and adjust it accordingly. So when we talk about replacement cost, it's the cost to replace today, not what it was when you bought it. Market value. We use market value when we're looking to determine whether or not a structure has been substantially damaged or is going to incur a substantial improvement. So when we're looking at that, we're looking at the market value, which is the cost of what somebody will pay for something. So when you buy a house, you're looking at the market value of a structure. And then we compare that to the cost of damage or the cost of the improvement. And if it is 50% or more, certain regulations require that that structure be brought into compliance to current floodplain management regulations. Need to talk to your local official, floodplain manager, to determine whether or not the damage or the improvement is going to hit that 50% mark or more. We also look at market value when we're looking at increased cost of compliance, which is a coverage under the policy. When we talk about increased cost of compliance, it's monies to help reach that mitigation activity. Risk. We risk things every day. Walking across the street is a risk. In the insurance industry, we're looking at perils: flood, fire, explosion, earthquake, tornado, windstorm, hurricane damage. Those are risks. And as an insurance agent, you need to assess those risks for that individual property owner. When we look at doing our rates, we try and spread that risk across the country. I know a lot of agents and a lot of property owners think that they're subsidizing people who live along the coast or people who live along the river. But the risk is the same. The risk for flooding or the probability of flooding occurs the same whether you're in North Dakota, California, Texas, or Florida. The risk is there. So we try and spread that risk across the country so that the cost is more evenly distributed. This is a single peril policy. We insure the peril of flood. It's written through a licensed insurance agent. We rely on the state in which the agent is located to make sure that that agent is in good standing, and that that insurance agent knows what he's doing, is licensed to do what he's supposed to do. When it comes to flood insurance, though, insurance agents sometimes say, I don't want to do it, or it's too hard. But the more you do it, the more proficient you become at it. You should be writing flood insurance on every risk, or at least offering it on every risk that you write, because the risk for flooding occurs everywhere. You cannot get insurance directly through the National Flood Insurance Program or through FEMA. It's written through one of our Write Your Own companies. Those are companies who have an agreement with FEMA to write policies on behalf of the federal government, and they're allowed to write the risk, collect a percentage of that, and to handle the claims and the customer service when something happens. When an insurance agent writes a policy, he turns it over to an underwriter to make sure that it's done correctly, all the proper documentation's been received, and that premium is accurate. So when we talk about premium, there's two things we look at. We look at actuarial rating or subsidized rating. I'm going to take the subsidized rating first. So when the program started back in 1968, Congress said, well, you know what? We really can't charge property owners who did not know what the risk was, who did not know how they should build, and built where they wanted to build the way they wanted to build. So the program subsidizes those properties, and those property owners only pay a certain percentage of what is called the actuarial rate of what it would actually cost to handle a claim for that particular risk. So our subsidized premiums typically are those homes that were built before the risk was identified for the community. Actuarial rating are those that are built to a certain standard and have to have their lowest floor at or above a certain elevation. We call that elevation the base flood elevation, and that's how deep the water is going to get during that base flood. And that base flood determination is different for every community. So when a claim happens, the company will send an adjuster who will look at the damage, make an assessment, and turn that assessment over to the company for review and for payment. We want to make sure that that adjuster is providing the best price or the best coverage for the damage that that property owner has incurred. So we take very seriously the premise that we want to pay you for what damage has occurred to your property. So where do you get flood insurance? Well, it's written through licensed agents in the state in which the property is located. We want to be sure that the agent writes property and casualty, is in good standing with the state licensing department, that must meet certain mandatory training requirements, not only for the NFIP, but for the state. So who does the insurance agent write the coverage through? Well, we have 70 plus companies that an insurance agent can contract with to write the flood insurance through, or he can write the policy through our direct side, through our direct servicing agent, which is a contractor that we met out every 5 years or so. So if you need flood insurance, contact your insurance agent, contact floodsmart.gov, type in your zip code, and see if we have an agent that has been put on our list for writing flood insurance, who has taken classes, who has taken continuing education, who is up to date on what the program is doing, and is very familiar with our rules and our regulations.